Well, hello. Getting set up a little early. I'm going live in 6 minutes to talk about closing costs. Can't wait. In the meantime, let me go ahead and share this with my group. I created a Facebook group earlier this week. It's called I'm Ready to Buy a Home. Having so much fun with that group right now. I've had 2 conversations today with people who joined the group, and they had some extra questions, and one was kind of afraid to ask the question in the group. So I said, hey, give me a call. And so we spoke, and she had very basic, normal questions, and she's actually going to, if she hasn't already done it yet, she's planning on posting the questions in the group because she realized, you know what, these are normal questions. You know, I helped her understand that. So I need to share this live situation real quick. I learned this morning how to share a live with one of my groups. I didn't know how to do it. But if you were on my yoga morning chat live this morning, then you saw me do it. You saw me learning. Okay, let's see, here we go. It's so easy. Refresh. There we go. And I'm just gonna share this right quick. So yeah, feel free to share if you have friends, loved ones, etc., people that you just know are interested in purchasing a home. This is a live they want to be a part of because, like I said, I'm going to be talking about closing costs. And yeah, closing costs are pretty important. A lot of people, when you're thinking about buying a home and you're getting started, you hear about closing costs, but a lot of people don't know what in the world they are. So let me do this really quickly. How's your day going? Guys, this is the last week of 2020. I am so ready for 2020 to be over. It's kind of weird though because I'm not doing anything this year, right? Trying to be safe. Okay, so that is up. I've got the live going in the Facebook group. Remember guys, the name of the Facebook group is I'm Ready to Buy a Home, and it's a safe space for people to ask questions that they have regarding real estate. It's literally what we're there for. It's all about real estate. I am in the process of creating one for sellers. It's I'm ready to sell my home. How easy is that? Yeah. But yeah, I feel like Facebook is filled with so much wrong information, and that's kind of what spurred me to go ahead and create this group, because I'm tired of fighting with people in other people's groups. I'm tired of it. So I said, you know what? I'm gonna go ahead and create my own group where we're gonna talk about stuff that I know is accurate. If I don't know the answer, I actually enjoy researching. That's kind of my thing as an attorney, and so I have no problem just researching it and trying to find the right answer, because my goal is to make sure that people go into homeownership knowing what the process is. And you know, there are a lot of costs involved, and for most of us, purchasing a home is going to be the most expensive transaction we ever have in life, and so I just want to make sure that we know what we're doing when we're doing it, right? Let me just do this really quickly. So yeah, invite your friends, invite your family. It's I'm Ready to Buy a Home, and all right. I'm gonna get started in 2 minutes. In the meantime, you can just kind of watch me and I'll just sort of ramble a bit. Close some things out on my screen. Am I the only person who hates having multiple tabs open on their computer? I just can't. It drives me insane. Just drives me crazy. This is fun. I'm playing with Facebook. Yes, confirm. All right. Okay. Kind of want to start early, but I said 2 o'clock, so I'm going to wait until 2 o'clock. I have my notes because I don't want to miss a closing cost. They're all important. They really are. And there's a lot of information to know about each type of closing costs. Yes, I am sitting on a blanket. I'm normally wrapped up in my blanket throughout the day, even though I live in South Florida and it's warm. I'm always cold. That's why I moved down here, actually. Okay, so it's 2 o'clock, guys. Let's get started. We're going to talk about closing costs as promised, and I'm going to break down the mystery of closing costs. So first and foremost, what are closing costs? Closing costs are things you're going to pay for when you sit down at the closing table when you purchase your home. Whether it's a condo, whatever it is, you're going to pay closing costs, and you're going to see the closing costs itemized on what is called a closing disclosure. That is the document that you sign, and the seller will also sign a closing disclosure at the closing, where it breaks down all of the fees, all of the costs. It's basically one big transaction report. So every single dollar that comes into the closing agent, whether it's a title company or an attorney, depending on what state you're in, it's different people that do closings. Every dollar that comes in has to be accounted for as far as where it goes. So there's line items. It used to be called a HUD-1 form, but they changed it back in 2009, I want to say. They changed it right before I moved to Florida. So I think it was 2009, and they now call it the closing disclosure, or a CD. And so if a check is going out to pay off the seller's mortgage, there's going to be a line item about that check on the CD. Every single dime that is spent has to be accounted for, and it's going to be on the closing disclosure, including closing costs. So let's get into it. There are about 14 closing costs that I'm going to go get into. If you have a question about a specific closing cost that you may have heard about and I miss it, go ahead, throw a comment in there. And if I don't catch it during the live, then I'll definitely go through later, and I will, reach out to people, or maybe even do a whole other video just to answer that one particular question, depending on what the question is and how detailed the response needs to be. Of course, always feel free to DM me. It's at Little Bit of Realty. And like I said, I did create a group, a new Facebook group that is focused on home ownership. And so it's called I'm Ready to Buy a Home. I will post the link in the comments here so that if anybody wants to just join, feel free to join, but also feel free to share with anyone in your network who might be interested in some of the information I'm providing. My goal is to be a resource for all things real estate. I think a lot of people have a lot of questions and they're afraid to ask, and I have a lot of information in my head. I've practiced law for over 15 years and I've always been in the real estate space, and so I know real estate inside and out, and to me, it takes 2 seconds for me to answer some of these questions, whereas other people, normal people may have to go on a deep digging dive and exploration in order to get there. And, time is money. I have no problem answering these questions for you guys. All right, so let's go. So the first thing that I have on my list are attorney's fees. Now, attorney's fees are not always charged. It really depends on your transaction and your state. Now, as I mentioned before, I used to practice I don't think I mentioned it on this, but I'm licensed to practice law in 3 states, New York, New Jersey, and Florida. And when I practiced up north in New York and New Jersey regularly, I did a lot of closings. I actually represented a lender up there, and so I did all of their refinance transactions and purchase money mortgage, which means when you're purchasing the property and you're using a mortgage, I did a lot of those transactions for them. And up north, in my 2 states up north, everyone has an attorney when they purchase or sell real estate. So the buyer's gonna have an attorney, the seller's gonna have an attorney, and you're also gonna have a title company. When I moved to Florida, I learned that things are very different down here. Down here, you can have an attorney represent you for your closing, buyer, seller, but it's not really the norm. Plenty of people purchase and sell property down here without attorneys. I think it's crazy, but that's perfectly fine. They do it anyway. And so if you're not using an attorney on your transaction, you're obviously not going to be paying attorney's fees. But if you are using an attorney, their amount, whatever they're being paid, is going to be identified on the closing disclosure as a closing cost. And depending on what your agreement is with your attorney, you may pay them up front, or you may actually just pay them out of the closing proceeds. Most people actually just pay it out of the closing proceeds. It's cleaner that way. The money will come directly from the title company to the attorney. That's what I do most of the time when I do help people out and represent them as an attorney at closings. I just wait until the closing to get my check. It works, it's fine. So yeah, attorney's fees, if you pay your attorney's fees before the closing, it is still gonna be shown on the closing disclosure, but it's going to say POC, which means paid outside of closing. And that goes for all of the closing costs. Sometimes you're gonna pay the closing cost in advance, but it still has to be disclosed on the closing disclosure form. That is a federal requirement. And the reason being is that buyers have a right to know every single thing they've paid for, and here we go. It's going to be on one piece of paper. Well, it's actually multiple pages, but it's in one document that they will receive. They actually are going to receive it prior to the closing. The lenders are required to get it to them 3 days before the closing, but at the closing, you're going to sign it and you're going to receive your very own printed copy of the closing disclosure. Well, some are emailing it too, but okay. So the next closing costs you're going to deal with are title searches and title insurance. So let's start with title searches. When you purchase a property, you kind of sort of want to make sure that you're not buying it with liens and the mortgage is paid off. And so the way the title company is going to determine what is necessary to provide clear title at the end of this closing is they're going to run a title search. They're going to review public records related to the property and the property owners. And they actually go back several years. I want to say 25 years in the state of Florida. That's just off the top of my head. They go back and search the title of the property. And this way, if there are any prior liens, they make sure they're paid off at closing. If there are multiple mortgages, because there can be, they make sure that they are paid off at closing by asking for a payoff from the lender, and at closing they'll just actually write a check or wire the money, whatever it is, to pay off that mortgage. If you have judgments, you being the seller, if the seller has judgments, they have to be paid at closing. Does the seller owe the IRS money? They're going to pay them at closing. So all of this stuff is public record. It's in the public records. They're going to review for lien searches. Let's say someone hasn't paid, I don't know, they're not mowing their lawn properly and they have a city that really pays attention to that, and they walk out with a ruler and they measure the lawn. People do this. They measure the grass and they issue fines. Well, those fines are liens and they have to be paid before you purchase the property. Why? Because the liens run with the land. So if they're not paid, you actually, as the buyer, are going to now have to deal with those liens. And if they're not your responsibility because they were levied before you owned the property, they should be paid at closing, right? Because you want clear title. So the title search is going to be run by the title company, and you're going to pay for the title search at closing. The second part of this one is title insurance. Title insurance is really, really unique, and if you've never purchased a home, you've probably never heard of it before. If you've never thought about purchasing a home, you've probably never heard of title insurance. So unlike health insurance, right, and dental insurance, with title insurance, you're not paying for future acts, you're paying for past acts. Specifically, what you're paying for are clouds on title that we don't know about. So yeah, the title company has just reviewed for recorded issues, like issues that are in public records. But what about things that aren't in public records? So let's say not the person you're buying from today. It could be the person you're buying from today, but let's say the person they purchased from an estate. Grandma passed away and the estate sold the home. During the estate, for some reason, whatever happened, one heir was omitted. They were missing from the estate case. Well, that heir has a right to the property, But now if you own the property and that heir sues you, you're gonna have to defend that case, right? You didn't know about this. There's no way for you to know about it. The title company isn't running full heir searches. They're relying on the fact that we have a court, we have an estate matter, we have a deed, we had a closing, right? So now you're getting sued. If you have title insurance, the title company will have attorneys on deck to take over and represent your interests in that case. Another instance that might pop up where you need title insurance or where it's great to have is forgeries. It's not uncommon. You know, it does happen from time to time where people forge other people's signatures. And what happens if a signature is forged at some point in the chain of title? The title company, again, they don't know. They have a deed in front of them. It's recorded. That's all they know. They don't know anything about what happened in the room when that deed was signed 15, 20 years ago. So now someone comes out of wherever they've been and they start suing you because they own this property. Again, if you have title insurance, it's going to kick in and represent you. Now, here's the thing with title insurance. There are two different types of policies. You're going to have an owner's policy, you, the property owner, and if you have a mortgage, you're going to have a lender's policy. Now, if you have a mortgage, the lender is going to require that you get lender's title insurance, obviously, right? And you pay for that. You are not required to get an owner's policy, but here's why I think you should do it, and I think it's a no-brainer, especially in Florida. I think every state does it like this as well. The fee for title insurance, first of all, is paid upfront. It's one fee. It's a one-time fee, and you pay it at closing. The fee is determined by a rate. There's a rate table in every state. So the state has mandated what the rate is, and it's based off of the purchase price or the loan amount in the event, and when you're talking about a lender's policy. Here's the thing. If you're buying two policies, you're not going to pay, you know, let's say it's $1,000. You're not going to pay $2,000 because one for lender, one for owner. No, there's something called a simultaneous issue rate. And so let's use that number again. Let's say the lender's policy is $1,000. In the state of Florida, the simultaneous issue, which means you buy both policies at the same time, it's $25. So you can pay $25 and all of the issues that you may not know about in the title history are covered under this insurance. It's kind of a no-brainer. Think about all the things that you spend $25 on the regular without thinking about it, right? So yeah, there's not much else for me to talk about with title insurance other than, please go ahead and get it, y'all. Okay, so some other closing costs, recording fees and taxes. Now, recording fees are pretty straightforward. Recording fees, whenever a deed gets recorded in the public records, you have to pay a fee. You might have to also pay documentary stamps, which are based off of the purchase price. You're going to have to record that mortgage, and the bank is not paying that for you. They're not paying the recording fee for you. You're going to pay it. That's a closing cost. What other recording costs? This one, the buyer's not going to have to pay, but if there was a mortgage, there's usually going to have to be a release or a satisfaction fee. The seller pays that. That's related to their mortgage and getting that mortgage off of your property. But those are your typical recording fees. In addition, taxes have to be paid. Taxes are going to be prorated between the seller and the buyer as of closing date. So let's take Florida for instance, and let's say that your closing is on November 16th. Tax bills go out on November 1st for the entire year in the state of Florida. So if you're closing on the 16th, chances are the taxes have already been paid by the seller's bank or the seller themselves. And that's for the entire year. But if you are going to own the property from November 16th through December 31st, you have to pay the seller back for the amount of taxes they paid for those days. And it's called a proration. That is a closing cost that you are going to see on your closing disclosure. It's pretty much all I need to say about recording fees. It's very straightforward. If it's got to be recorded, you're going to pay for it. Number one things you have to record the deed, and you have to record the mortgage. It is what it is. There's no way around it. And again, the reason why you're doing this is notice. Things are recorded for notice. Remember, we started off by talking about the fact that the first thing a title company is going to do is they're going to run a title search. Well, When they run the title search, they're gonna pull deeds, they're gonna pull mortgages. So obviously they have to be there. Survey fees. What is a survey? A survey is basically a boundary line map of your property. There are surveyors out there, they are licensed, and they look at these maps, these plat maps that talk about meets and bounds, and you're gonna walk X number of degrees. If you've never seen legal descriptions and plat maps, it's really, really interesting and really, really boring at the same time. But there are maps out there for everywhere, like every neighborhood, right? And you need to make sure the boundaries are good. What happens if your neighbor, the house next door, they put the fence on your line? The survey is going to show that, because the survey is going to show what the actual boundary of that property should be based on public records. And when the surveyor goes out there, they're gonna be doing the walking, walking the degrees and whatnot, and they're gonna see, this fence is not on the right side, and they're going to notate that on the survey. So you need to know what you're buying, right? And you need to know if there are people squatting with their fence on your property. Okay, so that's why there are surveys. Surveys are actually not that expensive, and typically the survey is going to be ordered by your title company. Again, if you have a loan, it's going to be required. The bank wants to make sure that the property is where it belongs, and they want to make sure there are no disputes about the property line. Okay, real estate agent fees, because yeah, we actually get paid. Somebody's got to pay us, right? I might love real estate, but I do pay my bills using real estate, right? So the agent's fees are disclosed on your closing disclosure. Typically, the agents are paid by the sellers, but everything can be negotiated in this world. So, but in general, yes, it's going to be paid by the seller, and that is a closing cost, and it's going to be on your closing disclosure. I don't think I have to say much more about that. It's so self-explanatory. Mortgage applications. Obviously, if you are going to have a mortgage, you're going to have to submit an application, and yeah, they charge for that. Most likely there's going to be a fee for the mortgage application. If not for the application, the lender will likely charge for other things surrounding the mortgage application process. They have admin fees, all that good stuff. It will be disclosed, and the lender is actually going to give it to you. They're going to give you like a breakdown, an estimate well before you get to the closing. But at the closing and the 3 days before the closing, you're going to have the firm number, because at this point they actually know what the number is. In the beginning, it's an estimate, because they don't know what's going to happen on your transaction, so they tell you it's going to be about this. But by closing date, they know exactly how much it's going to be, because checks have to be cut, and so they tell you exactly how much it is, and it's going to be on your closing disclosure. You're also, if you want, going to see points. Now, what are points? It's basically interest that you pay in advance if you want to. 1 point is equal to 1% of your mortgage amount. And the benefit of paying your points is you get to you actually will reduce your interest rate. Now, before jumping in and going ahead and buying discount points, you should think about whether it works for you. There are calculators all over the place. Run the calculators and run the numbers and see if it really does make sense for you. For the most part, buying points makes more sense if you plan on keeping that loan and that property for a longer period of time. If you take a look at a calculator, you'll see that if you're gonna sell this house in like 2 years, you're not gonna break even by buying points. So it doesn't make sense, right? So before you jump into buying points, run the numbers, make sure it makes sense to you. Okay, next we're gonna talk about prepaid interest. And this one is something that confuses a lot of people, okay? So again, very straightforward. Prepaid interest is interest that you pay in advance. Generally, unlike rent, interest on a mortgage is actually paid in arrears, which means behind you. When you pay your interest on your mortgage loan each month, you're paying for the prior month. It's really weird like that, right? So again, let's say you close on November 16th. You're actually not going to make your first mortgage payment until January 1st, right? The bank they're not going to just waive that interest. No, you're paying them. You're going to pay them interest from November 16th through January. Well, it's going to be through December 31st. And how you're going to do that is you're going to pay it at closing. And so on January 1st, when you pay, so you're paying January 1st. So on February 1st, when you make your next payment, you're actually going to be paying for the interest from January 1st through January 30th. It's really weird, but you do have to prepay it, and you're basically paying the interest that accrues from the date of your closing up until the first day of your mortgage, your first mortgage payment. Really weird, but it has to be done. There's no way around it. You're gonna prepay for it. So just know that that's something you're gonna have to pay for. Appraisals. Now, what is an appraisal? An appraisal is a valuation of your property. Now, as a realtor, I can provide you with what's called a comparative market analysis, where I can look at recent sales in the neighborhood and I can tell you, okay, this property, based on these recent sales, its value is X. An appraiser, again, they are licensed. They do a much more in-depth and accurate valuation. If you have a mortgage, you're going to have an appraisal. The lender, they're not playing games. The lender's not gonna they're not gonna use their money to pay for more than the property is worth. So they mandate and require an appraisal. If you're lucky enough to be doing a cash deal, highly recommend you go ahead and get an appraisal, unless you wanna overpay. If you wanna overpay, that's perfectly fine. I do know that there are instances where people overpay because value is really what you think it's worth. But as long as you know that you're overpaying and you're making that choice, then go for it. But I always recommend an appraisal regardless of how you're purchasing that property, how you're going to pay for it. Whether you're using a loan, you don't have a choice in that case, or paying cash, please get an appraisal. It's not expensive and it's well worth the expense. But if you do have an appraisal, it is a closing cost. I can say that lenders they go different ways. Some lenders require you to pay the appraisal fee up front, so before the appraiser goes out there, and some will actually put it as a closing cost that gets paid at closing. So again, remember I said before, sometimes you're gonna pay for things before the closing, and if that happens, it's gonna say POC, paid outside of closing. It's gotta be disclosed, but that is a closing cost, and it's very normal and customary to have to pay appraisal fees. Inspections. These are fun. So inspections, again, you want to know what you're buying. You want to know the condition of what you're buying. Most of us are buying property in as-is condition. And I mean, unless you're a plumber, an electrician, a termite person, like all that, you don't know what you're looking at. I mean, I can walk in like, oh, this house is beautiful, it's pretty. But you want someone who actually knows a little bit more about homes to come and inspect it and make sure that it's not about to crumble, right? So you get a home inspection. Do know that lenders are going to require that you get a home inspection. They're not going to require that you send them a copy of the inspection, and that's super important. Don't send them the inspection, send them the receipt. Your insurance company is going to ask for a copy of the inspection, and they need that in order to determine the insurance rate for the property. So inspections are very important. Again, even if you're doing a cash deal, I highly recommend that you get an inspection because you need to know what you are purchasing. But inspection costs are a closing cost. And then we have PMI. PMI, which is also known as private mortgage insurance. I'm gonna start with conventional loans first. Conventional loans are your typical mortgages that most people know about. And conventional loans comply with Fannie Mae and Freddie Mac guidelines. Long story, I'm not gonna get into the why, but just know conventional loans are your general mortgage loans, right? Okay, so if you put down less than 20% on your mortgage, there's a good chance you're going to be paying PMI, private mortgage insurance. And that is insurance on that 20%. Remember, back in the day, everyone had to put 20% down. And then they started making changes and tweaking it because it's really hard for a lot of people to get that 20%, to save up that money while living and paying rent or whatever. And so they created this process where you can have this insurance that insures the lender with that 20% of, you know, you not putting it in. So that's what it's really there for. It's not for you, it's for the lender's protection and benefit. You can remove PMI once you have 20% of equity in the property. And the way you get that done is, again, you can always order, you know, pay separately for an appraisal. This is, you know, years down the road, you're getting an appraisal on your property, and you can send that to the lender and say, hey, I now have 20% equity, I'd like to remove the PMI, and it can be removed. Now, not everyone who pays less than 20% on a conventional loan will pay PMI. It's very lender and program specific. There are programs out there for people, and it depends on the loan, it depends on the lender, it depends on what programs they're offering. But yes, you absolutely, it is possible to pay less than 20% and avoid PMI. If you can avoid PMI, I highly recommend you go that route, because it's a monthly fee that you pay in addition to your regular mortgage payment, and you don't get it back. So if you can avoid throwing money out the window, avoid it, right? Okay, now that's with conventional loans. If you have an FHA loan, which is, I always have to say this, an FHA loan is not a first-time home buyer loan program. An FHA loan is a loan that is backed by the federal government. And the great thing about FHA is they offer loans for people with less than stellar credit. So with an FHA loan, if you have a credit score of 580 or above, then you're required to put at least 3.5% down. If you have a credit score of below 580, then you have to put down, now it's 10%. With an FHA loan, you notice I just told you the minimums are under 20%, but here's the thing. With an FHA loan, you're going to be paying MIP, and it's a mortgage insurance premium with FHA. And the difference with an FHA MIP and a conventional PMI is you pay it for the life of the loan. It don't matter how much equity you're paying it for the life of the loan. Now, understand, if you have a cousin who had an FHA loan 15, even 10 years ago, they may tell you, nah, I paid it off. They changed the rules. It used to be that you could get rid of MIP. That is not the case anymore. You now will be paying it for the life of the loan. So the only way to get rid of MIP on an FHA loan is to refinance the loan or just pay it off, which if you pay it off, go for you. But MIP, so there's two portions, there's two different things with MIP. At closing, there's an upfront MIP of 1.75% of your loan amount, and that's due at closing. You can, it accrues, it becomes due at closing, but you can pay it in a lump sum at closing, or you can pay it, you can have it added into the loan and you can pay it over the life of the loan. In addition to that 1.75%, you are also going to be paying an MIP every month for the life of the loan. So just be mindful of that. It is a thing, it's there. And then we have insurance. Everybody knows you need insurance, right? You have to insure that house. Insurance is a closing cost. It's something you need to factor in when you're talking about buying a house, when you're talking about what you need to pay up front. Now, insurance companies are different. It depends on the insurance company. I've seen insurance companies that let you pay upfront before you even close. And then I've seen insurance companies that allow you to pay at closing. I should have said that the other way. I've seen them allow you to pay at closing, and I've seen them make you pay before the closing. Now, if you pay before the closing and you don't close, obviously you're gonna get your money back, because you can't insure something you don't own, right? So just know that it's going to be something you have to pay either at closing or before closing, and you're gonna be paying the first year's premium, the entire year's premium. So know that. It's a chunk of change. It's not, $20. It's gonna be, it's a sizable amount, and know that you have to pay that, and you have to have it for closing costs, okay? And then finally, last but certainly not least, we'll talk about escrows. What are escrows? Your escrow is a separate account that the bank will maintain, I should say will or might maintain. And in that special bank account, they hold on, escrow means to hold. They hold on to your funds, because it's yours, until it's paid out. And they're holding on to it on your behalf. And banks will escrow for two things. They will escrow for taxes and they will escrow for insurance. The way the escrow works is they are going to take a monthly amount. So from you, it's going to be 1/12 of the annual bill. So 1/12 of the annual tax bill and 1/12 of the annual insurance bill. And they're going to take that from you every month. When you look at your mortgage statement, it's going to have a separation. It's going to show your principal and interest payment and your escrow payment. Your escrow payment, you do not pay interest on. A lot of people, I've seen that on the internets and in the socials. No, you do not pay interest on your escrow. It is separate. It is a separate line item on your statement, and that is because it's not included in the factor of principal and interest. That's why they separate it. Principal, interest, escrows. Okay, so every month you're going to pay 1/12. At closing, remember, you've already paid for, any taxes that have already been paid for by the seller, right? You've already paid for the insurance for the first year. You are also going to pay prepaid escrows, and here's why. The bank is going to cut the check for you next year. So when your taxes are due, if you're in Florida, November 1st, so November 1st, 2021, the bank is going to cut that check for you. Your insurance, if you close on November 16th, your insurance is going to expire on November 15th and renew on November 16th of next year. In that case, the bank is going to make the payment for the following year's premium. The bank is not typically going to just give you free money, right? What's going to happen is at closing, you're going to pay, they like to have the money 2 months in advance. That's kind of their cushion. They call it a cushion. So they're going to take about 2 months worth. So instead of it being 1/12, it's going to be 2/12, 1/6, right? So they're gonna do that, and it's a prepaid escrow, and they're gonna hold on to it. And when the bill is due, I'm horrible at math, y'all. I have calculators everywhere. So when the bill is due, they want to make sure they have the payment, the money in their account 2 months before. Now, a couple of things about escrows. Not every lender requires that there's an escrow on the loan. I don't know why some don't, but some don't. If the lender doesn't require it, but they offer it, I recommend you go ahead and do it, because again, you're not paying interest on it. And it's very easy to fall into the trap of forgetting to segregate your money and forgetting to put the money, in a separate account so that you have the money to pay that bill when it's due next year. And I was a foreclosure attorney for 10 years. I've seen so many people end up in foreclosure because they didn't properly account for that money. And so the bank ended up making the payment for them, or the bank ended up getting them insurance because they let their insurance lapse. It gets dirty and it gets expensive really quickly. So if your bank offers escrows, I always recommend that you do the escrow if you have the choice. If you choose not to have an escrow, what I've done in the past, because I did have a loan once upon a time, my first condo, the lender did not take an insurance escrow. And so what I did was I had a separate bank account. It was a checking account that was just for all things related to that condo. So the mortgage payments, all that stuff was paid out of that account. And what I did was I created my own escrow account. So every month in my budget, I put away 1/12 of the annual insurance bill into that account, so that when it was October 15th, when the bill came out, I was able to cut the check. There would usually be a shortfall because taxes and insurance tend to go up every year. And so if you're doing it based off of last year's taxes and insurance, then it's gonna go up most likely. And so it's easier though to come out of pocket $200 because it went up by $200 versus coming out of pocket $1,400, right? So that's why I say if your lender doesn't do escrow at all, then you should create your own escrow account. And hell, if you want to put it in a savings account so you can get a couple of pennies of interest, go for it. But just make sure that you are prepared. and ready to go when that bill comes out. That's pretty much it for closing costs. Like I said before, if you have questions about closing costs, if I missed something, always feel free to reach out to me. I can also tell you that, you know, these numbers are very different. It's very transaction specific. It depends on where you are and, you know, how much you're paying for your property and, you know, what the rates are in your area. And so I can't say your closing costs are going to be this, right? No one can give you that firm number, especially if you don't even have a house in mind, right? But general rule of thumb is estimate 3 to 5% for closing costs. And that's a nice, safe number to work with. If you end up closer, if you save 5%, if you save an amount that's equal to 5%, and you end up only spending 3%, guess what? You got 2% sitting in your account you can buy your new furniture with, right? But yeah, 3 to 5% is your rule of thumb when you're dealing with escrows and, closing costs. And yeah, just be mindful. There are ways, you know, there are grants out there to help you with closing costs. There are seller's concessions. So you can ask the seller to contribute to your closing costs. Sometimes that works. At the end of the day, it's up to the seller to say yes or no. At the end of the day though, know that the seller has a number in mind of what they're willing, you know, what they want for their property. And so if you ask for concessions and, you know, as long as the number is where they want to be, like the bottom line number to them is where they want it, then they're likely to accept an offer that has closing cost credits and stuff like that. But just be mindful of that, especially right now where it's a seller's market. It's a little bit harder to get the seller to pay for closing costs because right now there are multiple offer situations. And so if they have 2 offers in front of them and one offer doesn't have closing costs credits and the other one does, I know me as a property owner, I'm going to go for the one that gives me more money. That's just a no-brainer, right? And so you always go for the best offer. So just be mindful of that when you're thinking about asking for credits. Be mindful of what the market looks like. If you're not working with me, if you're working with another agent, ask them for their recommendation. That's why we're here. You have an agent because you have someone who's a professional who knows the market and understands the market and also understands this area, right? Not everyone is an expert, so you go to the experts for things for a reason. Unless you want to learn real estate, you go and you get an agent to help you and represent you and walk you through the process. Anywho's, I hope this was super informative. Again, if you have any questions, you can ask me any question related to real estate or law, that's fine. But I do hope this was informative. I hope I've answered all of your closing cost questions. But again, if you do have more closing cost questions, feel free to contact me. I am at Lil Bit of Realty. And I hope you guys have a great day. Happy New Year, guys. 2020 is almost over. How amazing is that? We have made it. Happy New Year, guys. Stay safe, stay healthy.